dating, Tinder, that whole thing. You probably done it. Your friend's probably done it. Yo, testing. What up, HyperChange? Welcome to another episode. Today, we're talking all about online dating and one company in the space that we think represents a really compelling investment opportunity. You might be like, online dating, wasn't that a fad? Does anyone do that? Is that going away? Well, Tinder is taking off among millennials, and Match Group is the company that owns them, is its own public company. They're quickly selling off their assets, becoming an online dating pure play. I think this is a really exciting opportunity. The stigma around online dating is fading quickly for millennials. In fact, Pew Research estimates that just in the last 3 years, from 2013 to 2016, the amount of millennials who use online dating apps almost tripled from 10% to 27%. So the market for online dating is growing in two ways. First of all, more people are just going online and buying smartphones, and that market is just growing and growing. Additionally, with the stigma fading, we have this two-pronged effect of strong market growth and like potential user growth for years to come. Match Group estimates that in 2019, there will be 672 million singles online, and that will be their target market. And like I pulled up App Annie, the top apps for April 25th. Of course, Tinder's on there, number 10 in revenue. Like they're up there with HBO Now, Spotify, Hulu. So that kind of puts in context really how big this trend is. I mean, if you think about it, like go to any restaurant, you'll see all these 5 and 7-year-olds playing with like their iPad and iPhone. None of them look up. I don't even know if they can actually talk to humans unless it's through an Apple product. This generation, I think, now we're only at 27% of 18 to 24-year-olds on dating apps. That number is going to go to 50%, even higher. I don't know. I just don't think this is a fad. I think it's a real trend. And if that's your thesis, then Match Group is a really, really compelling stock and story. Spun out of IAC, which is a broader holding company worth about 5 or 6 billion that holds a conglomerate of internet businesses. They originally had Match.com, started acquiring more and more dating plays, and it became a bigger and bigger piece of their business. So eventually in 2015, they aggregated all of these dating sites that were owned by IAC, converted them into a new company called Match Group, and that company was spun out and now is publicly traded for about the past year or two. Match Group, they own 45 different brands. They're the market leader in online dating. They have OKCupid, Match.com, Tinder is their best asset, Plenty of Fish, like all these, I could go on, there's 45 of them. And additionally, the only asset they have that wasn't dating was Princeton Review, and that is getting sold in the first half of this year. So Match.com is officially going to be like the biggest, most attractive pure play of online dating. You've got incredible exposure to this great long-term trend, and the stock is really, really cheap. The company is only trading for about 5.1 billion. They did about 1.1 billion in dating revenue last year. That's a 4.5 times price sales multiple. Their dating business did 333 million in operating income last year. That's a 15x multiple of trailing operating income, even though the operating income was growing at like 30%. Tinder is probably by far their best and leading and quickest growing asset, but they're a conglomerate of all these other businesses like Match.com and OKCupid, which I guess are a little bit more mature, let's say, and so the growth rate's not that crazy. The company as a whole combined is projected to grow about 15% next year. Their dating revenue grew organically 15% last year. So the business is growing in like this 10 to 15% range. And I think this could continue for years and years to come, which is why buying such a high quality business with this kind of runway for growth at 15 times earnings looks very cheap. And remember, that's 15 times trailing earnings. This year, I think they could do somewhere around 400 million in operating income, if not more. That cuts down the current price operating income multiple to like 12 or 13. This is a really cheap business. And you maybe ask yourself why? Like everybody can figure out that Tinder is going to blow up and that online dating is the future. So of course the number one market share leader should get a premium. They're a really well-run business. Like why is it trading for such a cheap multiple? Well, because IAC, when they spun them out, saddled them with about 1.3 billion of debt, not too much cash. So although Match.com itself is producing significant cash flow and has the ability to pay off this debt, right now the company has a large amount of debt. If you include that in their market capitalization, their enterprise value goes up to about 6.4 billion. So it's like adds 20% to the value of the company. But I think that's also, it's like a double-edged sword because that's why it's cheap right now, but that's also why I think now is the best time to buy Match Group, because as they start paying off this debt incrementally, I think their multiple is going to expand. People are going to realize that the business is de-risking. Like they produce a ton of cash flow. I don't think there's going to be any problem with them paying off that 1.2 billion in debt. Frankly, like I even think this is almost a recession-proof business because I don't know, online dating, swiping on Tinder, like I don't think that's going to be a trend that'll go away if a reset. So we've got a recession-proof business, 15x multiple. A huge drag on the valuation is this debt load, which they're paying off very quickly. So in the next 2 to 3 years, we could see them pay off the majority of this debt load, and like meanwhile their cash position is ever increasing, and then I think we start to get like a much higher 20x multiple on earnings with a solid balance sheet. That's my pitch. Like, I think Match should be a fair valued at 20 times earnings. I think they have the potential to do at least 400 million in operating income next year. That values the company at around 8 billion fair value. If we put a 20x multiple in per share terms, that puts my target price of a market cap of 8 billion at about $29 per share, which is like more than 50% upside from today's price. To make this even more interesting is that although they have about 278 million shares total, IAC, the old parent company, only sold less than 20%. So the real amount of shares out there that are not owned by IAC is only 40 million. The average daily volume is just 1 million shares. So pretty thin for how big of a company this is. And even more intriguing is since the company has gone public, a short position has started to build up. Over 12 million shares are short of Match Group. This means that it would take shorts on average about 11 to 12 days if they were buying the entire daily volume to cover their short position. I would say that if you have a days to cover ratio in the double digits, this is like forewarning massive short squeeze potential, especially given the fact that Match short interest appears to keep rising and their daily volume keeps shrinking. Add into the pot, hedge funds are starting to get into the company now that I don't know why now. I guess they're seeing the same upside we are. 0.72, Stevie Cohen, infamous. Regardless of what you think of him, he just bought 2 million shares of Match Group, and he's long, and he knows there's shorts. I would guess he's trying to squeeze them out. I don't know. You have the potential of the business looks cheap. It's really good, high quality company that's very profitable, 30% operating margins, potential to grow at this 10 to 15% clip for at least the next, 3 to 5 years as they ride the wave of the online dating trend, the stigma fading, Tinder becoming a bigger and bigger part of how millennials meet each other, as sad as that sounds. I kind of like it because it's sort of like you're betting on like, okay, this weird dystopian future where we all the matchmaking in our society is done by a software algorithm. It sounds scary, but that's sort of where we're headed. So if you want to make money with the world coming to an end, maybe Match Group's your play. The added benefit of the short squeeze on top of an already cheap company makes this like too good of an idea. I don't own any shares. I don't have any money to invest right now, but this is one of my favorite large cap tech ideas. The most impressive thing about Match Group is that their innovation, like Tinder, has come in-house. They created a venture in the early 2010s, an incubator called Hatch Labs, and that was where Tinder was developed. Match has a really strong innovation engine. They've committed to launching these incubators to develop new app ideas that they have a track record of turning into incredibly successful, profitable businesses. See Tinder. In fact, they're doubling down on this strategy. They just announced the launch of something called Swipe Ventures, which is essentially just another big push to incubate a bunch of new app ideas to try and come up with the new big thing in dating. Guess who's going to be the CEO of that? Sean Rad, the CEO of Tinder and the guy who started it in the incubator with Match Labs before. To sum it up, I believe Match Group warrants a 20x price operating income multiple based on the company's growth profile, the quality nature of the business, and their track record of innovation and the fact that they've doubled down on innovation. Based on that 20x multiple and my assumption for 400 million in operating earnings this year, we're looking at a company with the potential to rise to 8 billion in value. If you add into the fact that there's 12 million shares short that take 11 to 12 days to cover, we could get a short squeeze here too, making it like Match get to that fair value very quickly. Short squeezes are a hell of a lot of fun if they actually happen. Cheap business, very high quality, impressive sector. Online dating is only going to get more prevalent, and short squeeze optionality upside. That's HyperChange.